morning is Mr. Awah Muirhead, and his manager investment banking at Barita Investments Limited. Of course, they've been doing a lot in the marketplace. Awah, welcome, man. You're here on a special occasion this morning.
Yes, thanks for having me.
Yeah.
It's a pleasure to be here.
So we're talking about, well, a name change on the face of it. Yeah?
Yes.
From Siboney Group to Innovative Energy Group.
Yes.
But Innovative Energy Group in and of itself is not a totally new company. They've been in the business. Why you chose that route to bring them to market?
Well, I mean, you know, Siboney, which is the company who was initially on the market and is the subject of the name change to Innovative Energy Group, has been there for some time. I would say more than 2 decades. And Nigel and his team from Innovative Energy Group came to us, and they wanted to essentially be a listed company. As you know, there are several ways you can do that.
Yes.
So the reverse takeover is one way, and the traditional way that most persons are used to is an initial public offer, yes, or the IPO. When we thought about what Nigel sought to achieve, you know, when we balance the costs associated with everything, the time it would take, the fact that, you know, Siboney has been ripe for the picking on the market for quite some time, just for a reverse takeover in particular. Having considered everything, we thought that Nigel's company was fit to do the reverse takeover, and so we made the steps to actually make that happen. What we have now on the market, instead of Siboney, I'd say is a vibrant company that is, I would say, fit for purpose for what we believe will be the next stage of growth for Jamaica, the Caribbean, and the world at large. Because if you think about where we're headed, energy sustainability is extremely important, and that is the focus of Innovative Energy Group. Nigel is extremely experienced in energy, sustainable energy in particular, and that is what we want to drive for the next coming decades, right? So Nigel's company is focused on solar, and outside of solar, they're looking to things like wind, hydro, etc. And I mean, if you think about just the largest economy in the world, the United States, for example, some of the largest companies that are taking over, like Tesla, are keenly focused on how can we revolutionize how we utilize energy to ensure that it is sustainable, and we don't have the significant negative impact that we've been having for the last couple of decades on our environment. So for us, it was a no-brainer.
So our Barita itself has been quite an innovative company since your own rebranding under Cornerstone. Talk to me about, you're coming into 2024. I mean, 2023, 2022, you've achieved a lot. The company has done a whole lot, brought companies to the market, raised funds for business expansion. What is 2024 looking like for Barita? Okay,
so you used the word rebranding for Barita. I would say it's less of a rebranding and more a passing of the baton, okay, from one trailblazer to an up-and-coming trailblazer, Mr. Paul Simpson and the Cornerstone team who bought Barita in 2018, right? And since that acquisition of Barita in 2018, Barita has grown tremendously. You can see it quite clearly, quite visibly, just by entering Jamaica. Once you reach the Norman Manley International Airport, you are greeted by a wall that is, you know, Barita, right? And if you traverse throughout Jamaica, no matter which parish you go to, I'm certain that at some point you'll see a Barita sign, and that is by design, right? We want to make persons know who Barita is. We want it to be front-facing. We want people to understand that we're accommodative. You can walk into our offices at any time and know, you know the B. You know what the B looks like. You know the blue. You know what the blue looks like. All right? And we've made our presence quite known over the last couple of years. We've done several capital raises for ourselves, as you have mentioned. That was instrumental in our growth. We looked at the market and we thought that the market was there, and persons wanted a strong investment. Persons wanted somewhere to put their cash to generate high returns, right? And I would say that since Cornerstone has taken over Barita or acquired Barita in 2018, if you look at the return that has flowed to investors since that acquisition, had you participated at the price that Barita was trading at the time, which was like $9 something, you would have made over 600%, right? And at its peak, you would make somewhere around more than 900%, right? So our growth has not been one-sided. Investors have benefited quite significantly. Outside of just the stock price, you'll notice that Barita is a consistent dividend payer.
Yes.
I mean, even in the hardest of times, particularly now, Barita has continued to pay a dividend. Right?
Oh, are you sure you're not in marketing? Listen, you're selling all the good things about, which is true, by the way. So none of it you had to put on. But in terms of where the markets are, and that's very important.
Yes.
Clearly, Barita has done their analysis. They've always been in peak of form, on top of their game in terms of market analysis. Where we are now.
Okay.
So we're talking about coming out of a period where interest rates went up, had to be normalized, inflation was up, and so on. Now, where we are today, where are we seeing the opportunities?
Okay. So the truth is, I would say we're not totally out of what has been a difficult time in terms of high interest rates, inflation above where we would like it. And this is not just a Jamaica phenomenon, this is a global phenomenon, right? The benefit of, the last year, 18 months is that there has been a very stringent approach to limiting liquidity, to limiting interest rates, particularly by increasing interest rates, right? And that, of course, helps central banks to calm inflation. So we're seeing the impact of that, right? Naturally, if you've looked at the stock market lately, you've noticed that, across the board locally, stocks have not been doing as well as we would like.
Indeed.
And it's just simply a matter of the environment. High interest rates makes things a lot more difficult. So if you look at financial services companies, for example, just how money is made, it's a spread. Right? So to the extent that the cost of funding for these companies go up, then naturally you have a negative impact, broadly speaking. So where are the opportunities? Now, a lot of persons have looked internationally for opportunities, and the reason for that is, simply speaking, the international capital market, and in particular the US, which is a very close neighbor. It's in the Western Hemisphere. It's known to most of us. It has the largest stock exchanges. It presents opportunities because the length and breadth of companies that you can actually venture to purchase some amount of stock in is quite broad, right? So it gives you an opportunity to benefit from entities that do benefit from high interest rates, right? It gives you an opportunity to benefit from innovative solutions that transcend the market, the happenings of the market environment, right? More locally, naturally, because of the interest rate environment, the opportunity has to be in the bond market, in large part. So fixed income has become far more important in your portfolio, just simply because fixed income benefits from higher interest rates, right? There's no going around that. So today, a repurchase agreement could give you upwards of 7%. You compare that to maybe 3 years ago, you were looking at maybe 2-3%, right? And bonds these days, easily double digits, right? So, I mean, from that point of view, there is opportunity if it is that you do want to go into fixed income. Real estate continues to be an area of focus. For the life of me, you know, Jamaica tends to have, you know, a very, I'd say, a bubbly, you know, real estate environment. And what we've seen is that there's been a focus on metropolitan areas, and this is a trend that has taken place internationally. So Kingston has been very buoyant in terms of, you know, there's significant development happening here. But as Kingston gets to its natural limits, it then means that, you know, we're going to have to broaden. Suburbs. We have to go into the suburbs, just like we have in the U.S. And so many other developed markets. So it does continue to create opportunities, and what the government has been doing in terms of, you know, road linkages, making these highways, making it easier to go from one part of the country to another, means that there is going to continuously be opportunities in real estate, and not just in Kingston. So the opportunity set here is to find those areas of the market where naturally it's poised to benefit, you know, from what is happening.
So you're heading east. Barita inside house.
Can't say much, but we do look for the opportunities consistently. We do tend to advise our clients when it is that we do see shifts in the market, inflection points, if you will, where we anticipate that a change is upcoming, and naturally this, you know, puts us in a position to benefit. Naturally, I mean, we are participants in this environment, so to the extent that it is hard times, then we will be affected, right? But we position ourselves to be as you know, as nimble as possible, with very small impacts from any negative effects in our environment. So we try to be ahead of the curve at all times.
When we look at the stock market itself, and you chose, as you said, the different means of bringing a company to the market this time around, should we be looking, certainly maybe second quarter into second half of the year, for more listings, more raises through the capital markets? Is Barita going to be active in that space?
Okay, so you mentioned listings, and I want to bring the focus to broaden it a little bit, right?
Absolutely.
Because what we've grown accustomed to locally when we hear listings is equity, common equity being listed. So a typical IPO, right? But in the international sense, the international capital market, a listing is not limited to common equity.
No, it's not.
Right? Which brings us into the realm of, you know, bonds and what that means. So we had touched on it this morning in our little meetings earlier, right? In terms of the green bonds and what that could mean for various entities, and it opens up the floodgates for companies to look beyond just listing their equity, right? Because you have to be cognizant of the market that you operate in. And truth be told, no matter where you are in the world right now, well, save for a few outliers, equities are being beaten.
Yeah, true.
Right? Because interest rates continue to be high. So listings, yes, but listing of what? I think we're in the perfect market for bonds to be listed, right? It gives greater transparency for investors who want to buy bonds, and presently that is somewhat lacking because our bond market locally tends to be very private. So we do a lot of private placements, but the listing part of things is not so typical. Now, if we can push that a bit more, right, we can see listings. We can see listings of bonds, and it is beneficial, right? Because an investor, one, gets the higher return in this higher interest rate environment, and two, is able to actually visibly see how the company that they've, you know, purchased this bond from is performing. So listings, yes, but perhaps not in the traditional sense, but I think it would still be extremely beneficial to investors.
Absolutely great. As we look to wrap, anything you'd want to say to the market? I mean, what's the exciting things? I know you said, well, look, let's take a look at the green bonds area. Bonds is really where things seem to be happening, just based on where rates are at the time and where the market is generally.
Yes.
What would you want to leave on the minds of investors as we pretty much close out the first quarter of the year?
I would say that opportunities are abound, and hard times don't last. So I would say presently we are having a little bit of a rough patch with high interest rate. 2 years ago, the buoyancy of the stock market would have been quite significant, and periods before that, right?
Oh,
so.
yes.
So prior to COVID-19, and that is still fresh in the minds of investors. So, I mean, some investors you speak to, they might be a little bit skittish now because they're not seeing the 100% returns and more that, you know, we became used to some time ago. But that does not mean that you should, you know, come out of the market. It actually does mean that you should double down. You know,
it's time to look for the opportunities.
It's time to look for the opportunities. And if you don't believe me, just look at history, right? World War II didn't last forever. World War I didn't last forever. COVID-19 didn't last forever, right? So opportunities are there, and at Barita Investments Limited, we're here to guide you. So to the extent that you want to pursue those opportunities, you want to get insights on, you know, where to put your money, then our doors are always open, and we have a very strong team of intelligent money managers, fund managers, advisors, etc., that can steer you in the right direction. So please feel free to come.
Excellent, excellent. I couldn't have said it better. Awah is saying, why waste a good crisis? There's always opportunities in a crisis. Saying, come and talk to them at Barita Investments. They know how to make it happen. It's they who said they'll make your money work for you. So that's why we do these programs. We give you information to make better financial decisions. Come back with us tomorrow morning at 9. We'll have another incisive and informational program lined up for you.